while the American media was busy obsessing over Trump's latest rally, while Wall Street was distracted by the daily noise of the stock market. A phone call happened in Tokyo that just changed the course of your financial future. Well, it's here. Breaking news out of Japan confirms that the Bank of Japan is raising interest rates again. The Japanese 10-year yield just hit a 27-year high. To the average person, this sounds boring. Who cares about Japanese bonds? You should care. Because Japan is the #1 holder of United States debt. They own over $1.1 trillion of our treasuries. And right now, to save their own dying currency, they are being forced to dump those treasuries onto the market. This is the Tokyo trigger. The biggest buyer of US debt just became the biggest seller, and they are doing it at the exact moment Donald Trump is threatening tariffs that are pushing the global trade system to the breaking point. If you have a mortgage, a 401k, or money in the bank, you are standing in the blast radius. The bond market is breaking, and when it breaks, there is only one asset class that doesn't have counterparty risk. It's not Bitcoin. It's not real estate. It is the metal that has survived every empire collapse for 5,000 years. Welcome back to channel. Hit that subscribe button and turn on the bell. You cannot afford to be late to this info. Everyone looks at the stock market to see if the economy is healthy. That is a mistake. The stock market is a casino. The bond market is the bank that owns the casino. And the bank is currently on fire. If you want to understand why your grocery bill is about to double again, and why silver is poised for a vertical move, you have to understand what is happening in Japan right now. If you are new here, hit that subscribe button. We don't do fluff. We do hard macro analysis to help you protect your wealth. Comment below. Are you worried about a US dollar collapse? Yes or no? I want to see how many of you are paying attention to the debt clock. Now, let's connect the dots between Tokyo, Trump, and your portfolio. For the last 30 years, Japan has been America's piggy bank. They printed yen, and they used that yen to buy US Treasuries. This kept their currency cheap, good for Toyota, and our interest rates low, good for your mortgage. It was a symbiotic relationship. We got cheap loans. They got a strong export market. But that relationship just ended. The Japanese yen has been crashing. It has lost 40% of its value in a few years. The Japanese people are furious. Inflation in Tokyo is skyrocketing. The Bank of Japan (BOJ) has no choice. They must raise rates to save the yen. But here is the trap. To defend the yen, Japan needs cash. They need ammo. Where is their money? It's locked up in US Treasury bonds. So, to save themselves, they are selling our debt. And this is where the Greenland threat comes in. The markets are panicked about Donald Trump's latest threat to impose massive tariffs on nations that don't cooperate with his resource deal, specifically regarding Greenland and rare earth minerals. Japan sees the writing on the wall. They know a trade war is coming. They don't want to be holding us debt that Trump might devalue or weaponize. They want a war chest of neutral assets. They want cash, and they want gold, so they are hitting the sell button. We are seeing a massive spike in US yields because the biggest whale in the ocean is leaving the water. Let me explain simply why this is a nightmare for the US economy. This is the key insight you need to understand. When Japan sells US Treasuries, the price of the bond falls. When the price of the bond falls, the interest rate yield rises. It's an automatic see-saw. Because Japan holds $1.1 trillion, their selling pressure forces US interest rates to the moon. We are watching the 10-year Treasury yield rip higher. It is approaching the danger zone of 5%, 6%, maybe higher. Why does this matter to you? Because the US 10-year Treasury is the benchmark for everything in your life. Mortgage rates are pegged to it. Car loans are pegged to it. Business loans are pegged to it. Credit card rates are pegged to it. If Japan keeps selling, mortgage rates in America don't stay at 7%. They go to 10%. They go to 12%. At 12% mortgage rates, the US housing market freezes instantly. Prices crash. At 12% interest, the US government, which is $36 trillion in debt, cannot afford to pay the interest on its own credit card. We are currently paying over $1 trillion a year just in interest. If rates double because of Japan, we will be paying $2 trillion, then $3 trillion. It is a mathematical impossibility. The US government goes bankrupt. So, what happens next? This is the pivot point. The Federal Reserve has two choices. Choice A: let rates rise. Let Japan sell. and watch the US government default and the economy collapse into a Great Depression. Choice B. Step in and buy the bonds that Japan is selling. Who has the money to buy $1 trillion of unwanted bonds? No one. Only the Fed. But the Fed doesn't have money. They have a printer. They will be forced to launch yield curve control (YCC). They will print trillions of fresh dollars to buy the bonds and artificially suppress the interest rates. This is the end game. Japan sells dumping dollars. The Fed buys printing dollars. Both actions destroy the value of the US dollar. We are looking at a flood of liquidity that makes 2020 look like a warm-up. This is why silver is trending. This is why the price is moving. Investors are realizing that a US Treasury bond is no longer a risk-free asset. A bond is a promise. It is a promise that the government will tax future citizens to pay you back. But if Japan doesn't trust that promise, why should you? If the US government is bankrupt and the Fed is printing money to cover the bankruptcy, the promise is worthless. You get paid back in monopoly money. This brings us to counterparty risk. Every paper asset has counterparty risk. Stocks. The company could go bust. Bonds. The government could default or inflate the debt away. Bank. Deposits. The bank could fail bailing. Fiat currency. The central bank destroys the purchasing power. Silver has no counterparty risk. If you hold a physical silver coin in your hand, you don't need anyone to fulfill a promise. You don't need a CEO to make a profit. You don't need the Fed to be competent. You don't need the electricity to be on. It is the value. It is payment in full. When the bond market breaks, capital flees from promises to reality. That is why gold is at all-time highs. But silver is the high beta play. When the Fed turns the printers back on to save the bond market from this Japanese sell-off, inflation will ignite. And during high inflation, silver historically outperforms gold. We are looking at a scenario where the safe haven of the last 40 years US Treasuries is becoming the toxic asset, and the toxic asset, gold and silver, is becoming the only safe haven. Japan is building a war chest. They are preparing for a world where alliances are fractured and trade is broken. They are moving into cash and gold. You need to build your own war chest. Don't wait for the official announcement that yield curve control has started. By the time they announce it, the dollar will have already cratered. The markets move in anticipation. The bond market is sniffing out the weakness. That's why yields are rising, even though the economy is slowing. It's a paradox. It's called fiscal dominance. The selling coming out of Tokyo is the first domino. Next comes China. If Japan sells, China, who holds $700 billion, will look at their portfolio and say, "We better get out before the price drops further." It becomes a stampede. You do not want to be standing in front of a stampede of sovereign nations dumping US debt. You want to be standing on the mountain of precious metals, watching the flood from above. The Tokyo trigger has been pulled. The bullet is in the air. It hasn't hit the US economy yet, but it's coming. The media will call it a correction. They will blame it on technical factors. Don't listen to them. This is structural. This is the unwinding of the biggest debt bubble in human history. Japan is leaving the party. Who is going to pay the tab? You are. Unless you opt out. Opt out with physical silver. Opt out with real assets. If this video helped you connect the dots, please hit the like button. It helps us wake more people up. Share this video with anyone who has a 401k full of bonds. They need to understand the risk coming from Japan. Subscribe to Wealth Unwired. We are watching the bond yields every single day. If they break 5%, we will be going live with an emergency update. Comment below. What is your war chest? Silver, gold, or ammo? Stay sharp, stay stacked, and I'll see you in the next one.